Hello my dear students, welcome to online accountancy class. In this session we are going to consider the solution of board paper 2012. So this is our solution. Before going to see the solution, once we can check the working here. There are two major working in this question, only journal entry being asked, but it will better if we directly so realization as well as partners capital in ledger account. That will help to pass the journal entry. So like that, the first working, that is realization account. This is like first phase entry here, transferring entry, the total asset. There are three assets. So realization account debit to sundry asset, land and building 3 lakh, stock 1 lakh, and debtors 1,50,000. Total sundry asset, it is 1,50,000. Now after that, one like a liability, that is 1,05,000. 1,05,000, that is creditors, external liability. Now in adjustment, it is mentioned that land and building was like takeover by first partner, that is Mr. Sanjay, and he paid cash then and then for this 3,50,000. So therefore here we are debiting bank account, not like Sanjay capital account. So why bank? 3,50,000. I already told, if any partner take over any asset but the same partner paid cash, will give the importance of that cash. Cash inflow is there, cash balance increases, so no need to debit partner's capital account, rather than you have to debit bank or cash account. So here we are debiting bank account. Next, another stock like rupees 1 lakh rupees, which is recovered rupees 90,000. So it is very simple, buy bank, inflow of cash 90,000. Now regarding the creditors here, that creditor of 1,05,000 take over that debtors here. Creditor take over debtors in full settlement of his claim. So creditor will not ask any more amount from the partnership firm here. They are satisfied by taking rupees 1,50,000 debtors at the value of rupees 1,05,000. So that type of like mutual transfer entry, when like creditors to debtors, that type of entries arises, we will not pass that any entry for that. Otherwise, like here, creditor payment purposes, once you have to write to bank 1,05,000, debtors realized purposes y bank. So it is meaningless. It is ultimately being cancelled. Net result is coming 0. So we will give the notes here that creditors take over debtors in full settlement of their claim. No entry is required, as like ultimate result is coming 0. So therefore here this is that realization result. Now we can compare, that is debit side is heavier than the credit side, and that is 5,000 amount here. That 5,000 is being lost, and that loss is being transferred to both the partner, that is Sanjay and Shamir, in their profit sharing ratio 2:3. So therefore by loss on realization and transfer to both the partners capital account. Now we will open the partners capital. It is a rough working number 2, partners capital account. Opening balance, it is provided by balance BD. Once you can check that balance, here it is the balance 2 lakh and 3 lakh, and workman compensation is 1 lakh. So here by balance BD 2 lakh as well as 3 lakh opening balance. Workman compensation fund 1 lakh. No claim arises, so it is considered as an internal liability, and full amount we have to distribute to the partners. So therefore by workman compensation fund, and the ratio 2:3, so 40,000 and 60,000. This loss will transfer here two side. So partners capital to realization account. Loss has to transfer. Now after that we have to calculate, that is net amount payment for final payment purposes. Sanjay total amount 2,40,000 and Samir 3,60,000. That minus of realization loss, so 2,40,000 minus 2,38,000. Sanjay will take back like 2,38,000. He can withdraw from the partnership as the final payment purposes. Exactly the same way 3,60,000 Samir came, 3,000 loss. So minus 3,000, 3,57,000, which is returned to like Samir as a final settlement. So this was a rough working, but here in this question, it is being asked to pass the journal entry. Very simple, like one by one. First phase journal entry, like transferring entry of asset, realization account debit to 3 asset, expect cash and bank. Realization account debit 5 lakh 50, to land and building 3 lakhs, to stock 1 lakh, to debtors 1 lakh 50,000. That is the book value. It is provided in the balance sheet here. There is 3 lakh, 1 lakh, and 1 lakh 50. The same way we are transferring this entry. Now liability transferring only one external liability is there. Caterers account debit to realization 1 lakh 5,000, 1 lakh 5,000. Now recovery of asset like land and building recovered, which was taken by the one partner, but he paid by cash. So therefore bank account debit to realization at that amount, like 3 lakh 50,000 amount he paid. So bank account debit to realization 3 lakh 50, 3 lakh 50. After that, like another asset like stock also realized here. The stock value realized 90,000. So bank account debit to realization. Now after that loss we got from this working here, that loss, when loss arises, partners capital account debit to realization. Therefore Sanjay capital account debit, Samir capital account debit 2,000, 3,000 as well as 5,000 loss. Now after that, like workman compensation fund transferring into workman compensation account debit to partners capital account 1 lakh 40,000, 60,000 in their profit sharing ratio. It is treated as an internal liability, undistributed profit like a general ledger, same way it is transferred. Now after that, like the last entry, that is for final payment of at the time of closing of business, partner will withdraw the amount at the time of closing of the business. They will get back return, like Sanjay will get 2,38,000 and Samir will get 3,57,000 we got from working 2, and with that help of working 2 we can pass this entry as well as this entry also, and this is for working 1. So therefore this is the final payment entry here, like Sanjay capital account debit 2,38,000, Samir capital account 3,57,000, and total of that 5,95,000. So that was the solution of the board paper 2012. That was a simple, just like 2011. Similar type of problem we can see here and board paper. And not only that, like in last year also same type of problem came past the journal entry in 2019. Same type of problem came to 2020 also. Dissolution problem came. We will consider in subsequent classes. Now related to one topic, that is realization expenses purposes, we want to consider there are 4 situations which can arise, that is realization expenses, like at the time of closing of the business partnership firm, when it is being closed, that time the realization expenses, who actually bear that realization expenses. Sometimes that realization expenses paid by the firm, sometimes realization expenses paid by a particular partner, sometimes paid by firm on behalf of partners. Sometimes there is one agreement among the firm and partner, that that partner particularly receives some remuneration, and for that the partner will bear entire amount of realization expenses. So there are 4 situations which can come any situation in examination time. So we have to know carefully like what entry will be there. There's a first situation when like realization expenses, say for 10,000 realization expenses which is bear by Mr. X. X is a partner, a partnership firm. So at the time of dissolution, what entry will pass for realization? In case of first situation, realization expenses paid by Mr. X. Very simple. When realization expenses paid by a particular partner, that time the entry will be realization account debit to partner's capital account. If X paid, then it will be X capital. So first cases it is provided paid by a firm. So if you consider the first case, so like realization expenses paid by the partnership firm, so cash is being out from the business, so automatically 2 cash or bank will be there. I do know realization for any expenses purpose, realizations will be debit. So therefore in case of first situation, realization account debit to bank account, first situation. Second situation, like paid by a partner on behalf of the firm. So when any like farm expenditure paid by a particular partner, so artificially his capital will increase. So therefore that realization account debit to respective partner's capital. Suppose X is a partner and he paid rupees 10,000 as realization expenses. So what will be the interior? The realization expenses, realization account debit 10,000 to X capital. So this time we will not credit cash or bank, because cash or bank balance is not decreases at that moment, rather than like one partner's capital is increases as he paid out of his private sources or private fund uses here. So therefore, in the second situation, the entry will be realization account debit to that respective partner's capital account. Now third situation, paid by firm on behalf of partner. Paid by firm on behalf of the partner. So ultimately, in this situation, like ultimately paid by the firm, but that should pay by a particular partner. So it has been assumed that here that partnership firm repaying some amount to a particular partners. So ultimately when cash paid or cash withdraw particular partners, so generally that entity capital decrease entity capital account debit to cash or bank account. So that entity will have to pass like partners capital account debit, respective partners capital account debit to cash or bank account. So for example, like X and Y are partners, like Y should pay realization expenses, but that was the agreement among the partnership firm and Y. But at the time that firm paid on behalf of Y, so that time the entity will be like Y's capital account debit to bank account. In this cases, realization account debit to bank will not do, because here farm cash balance decreases, but ultimately one partner on behalf of one partner, so his capital should also decrease. Therefore, capital will be debit as well as cash will be credit. The last situation. This is the last situation. There is one agreement between the like partner as well as firm, that firm agreed to pay fixed amount to a particular partner, and the partner has to bear all these realization expenses. So when such type of situation is there, like agreement is there, say for an example, like XYZ, there are three partner. Now there is an agreement between partnership firm and Z. Like Z will bear all realization expenses, and partnership firm will pay some amount to Z as his remuneration. Say for the remuneration, it is agreed 10,000, but practically Z paid 12,000 realization expenses. So in that ground here, we will consider that remuneration part only. So 12,000, it is immaterial to the partnership firm. We will think on behalf of the partnership firm, not individual partner. So in that cases, the entry will be that realization account debit to Z capital. So ultimately realization account debit to Z capital, and that agreed amount will consider whether higher or lower amount paid by the partner, that is immaterial to us. What is the agreement, that amount will consider, and the net entry will be that realization to respective partners capital account. So this is the fourth situation. First situation, paid by firm, so realization to bank. Second situation, paid by particular partners, so that situation realization account debit to partners capital. Fourth situation, firm paid on behalf of partners, so that time partners capital to cash or bank account, and it is under agreement. So entry will be just like similar to 2, but we have to like see that what is the agreement amount here. That amount will consider. Lower or higher amount can be paid by the partners, but we will ignore that. So that time the entry will be same like number 2, that is realization account debit to partners capital, agreed amount only. So this is the related to realization expenses, which will create some problem during examination time. So therefore they are the 4 alternative situation I explained. I think so this will help to the learner. So learner should go through, uh, and this type of problem we'll consider, like when you are going to consider different year question, we'll get one by one such type of situation. So it will help to solve that type of problem, that is question from board, like board paper. Okay, thank you. That's all. I am going to conclude this session.